All right, we're live.
This is Market Week Live for December 19th, 2025. Information and support for traders and for investors. Welcome, everybody that's a member and in here in our Zoom room, and to everybody out there that's watching on social media or on YouTube. We're very happy to have you checking in on what we have to offer you today, which, of course, I think is going to be great information. Coming up in this show, our level 1 to 4 members, they're in our Zoom room and can ask questions for analysis if that's what you're interested in, something about our services, trade planning, chart, analysis overall as just as a general education, and also any trading issues that you might be having individually that you'd like to discuss. Matt is going to show you our review of our services, specifically our holiday specials. That's Give the Gift of askSlim, an amazing deal because we give you back a gift, and our new day trader upgraded version, which just blows away anything I've seen out there. I'll bring you my analysis on the SPX and the VIX and the stock market, and also show you our market condition monitor with our proprietary studies, and you'll see our analytical process throughout the show. Today, I want to make sure if you're brand new that you go to the top of our website and go to the SIR Lite. It's in the free stuff and sign up for our analysis on the S&P 500 every day. It's free. Matt does a great job on this and brings it to you every day. Also, I want you to check out askSlim. And when you go there and go to the bottom right to Slim AI, that is right here. I'm pointing way down on the bottom right, and you see me right over there. Just click on that. Especially if you're brand new, you can have a conversation with me. I'll talk to you in my voice. Just hit this start the call or type in any question that you might have there. You can ask questions about our services that we offer and general questions about trading, investing. Slim AI has got it all, and you can talk to it about markets. Don't ask it to give you analysis because it will not do that. It's just simply meant to be an educational tool, and it will be just astounding. Once you try it, you won't believe how good it is. So that's Slim AI. Please go down to our website, askSlim.com, click at that, click down there, and talk to my virtual twin. So we're gonna also, for people that are on YouTube, make sure you subscribe to our channel, click the notification bell, and do like this video, give it a thumbs up. On X, follow me at askSlim, and any questions you have, you're gonna write to Matt at askSlim.com. Everything that we bring you is for entertainment and educational purposes. It's meant to be, brought to your own investment advisors, anybody who helps you make investment decisions, and always do look at your own trading plan. Anything you need to know about our legal, that's at askSlim.com. You want to contact us about member issues or website issues, write to team at askSlim.com. And again, anything on our content, on our educational analysis, first time specials, holiday specials, upgrades, anything that you want to know about our membership, Matt's the guy. Write to Matt at askSlim.com. Our hosts today, well, we have all four of the best experts that I know in cyclical analysis, technical analysis. We bring it all together. I've been in this business 51 years now as a trader. I think I'm winning that race for most of the people that started way back when I did. Thank heavens. Matt's been a couple of decades at this. RV also. Katie is just a fantastic expert in not only cycle analysis, but also option analysis. And I'll show you just in a little while. She's going to be our new lead in our new investor hub. Absolutely great for investors. Learn about us. Go to askSlim.com, about askSlim, meet the team, and watch the interviews that we did there, and you'll learn more and more about us. Okay, this is where we take the Q&A right now. And the way that we do this is that since I'm the lead when it comes to commodities and futures, I'm the one that handles those questions. And I see a bunch of those there for me right now. So I'll take about maybe 7 or 8 minutes and do those. And then the team will take over and they'll do anything that they have on the equity side that you're requesting or the ETFs. This segment at most is going to be about 15 minutes. So we'll cut you off at some point and not take anything. So we have, I see that for me right now, I have on my list is Bitcoin, Ethereum, silver, natural gas. Okay, got those four. And that's it for me. And then if anybody is out there that has anything more that you want to put out there or any questions about trading, then you can put that there for me. If not, the team will take over in just a few minutes. So let's switch over to the charts, and you'll see in here. Well, first question that we brought was on the Bitcoin market. So I'll look at that one first. The grid that I have set up here right now is the weekly on the left here. This center one is the daily, and this little one over here is the 2 hours, so I can get an idea of the 2 hour information down there on the left on the right. The when I look at this, what I want to make a point of is the different studies and information that we have on here very quickly. And that is on the bottom is the cycle brackets. That's a drawing tool that helps us see the money flows, the rhythms in the market. Up on here, we have the reversal scout, which I love to use to help me with momentum on the weekly chart and to identify the peaks and troughs in the cycle patterns. Over here, we have the slim ribbon on there and the reversal scout. On the bottom here, the slim ribbon PO, which is just an amazing indicator for level 4. And way down on the bottom there is the option bias indicator, which is meant to help you keep your option positions on the right side of the market. Let's take a look at Bitcoin here. So we've been bearish on Bitcoin, on the cryptos. Once it broke underneath this level here, it confirmed to us that this downward turn in momentum was significant and that it was likely to decline into this period, which took you out towards the end of the year. You see this note that I have right over here that says that the daily and the weekly have synced troughs in early January. So that says to me that what's going on here is a consolidation after this big break. You could see the momentum is still pointing to the downside. It is possible that this is making the bottom right in here. I would put that as the lowest probability. The higher probability is that this over here, that low, which occurred around 80,500, will be tested or taken out. The next support right down over here is at 74,200, which is a possibility out to January. Now, it's been having some very, very big interday downswells where it seems like there's been a lot of liquidations, whether it be because of hitting margin calls or because there's some older holders that are in the Bitcoin market that keep selling it. So you could see that it's consolidating in here. I think that it's a consolidation that probably sees one more downside move, but then after that, it's going to set up the next rising phase out over here. You can see this rising phase right over there based on the rhythms that you see. This is ETH. It's slightly out of phase with the Bitcoin market. And you can see over here, I might be converging a little bit more when I look at the ETH, you'll see it. And then you'd expect that there'd be a rally up in here over at least 100,000 sometime in January, February, after this consolidation and the bottom in here is set. So here you could see, this is really cool because you could see the beautiful cyclicality that's in here on Bitcoin, and that this consolidation is this is what it looks like here. So this is the slim ribbon pointing to be negative, the slim ribbon PO giving you these momentum resumption signals. That's what those arrows mean, is that it's red, the slim ribbon is negative, and the resumption is likely to come to the downside. And you can see that's happened in here several times. Now, Bitcoin, you look at it today, it's up $3,500. That looks like a big move when you look at the number on the screen, but when you look at this, you see it's really nothing. The slim ribbon has tended to give it the resistance that often happens. It will give it support on the way up. You could see that it was doing that right in here. And this is that corrective period right there. Whoops. That aligns with the weekly. So this comes down into sometime in January. Here's that weekly coming down here into January right over there. So it's a warning to me when I look at this that there is more downside yet to come. So that's a look at Bitcoin when I look at ETH. And I have said on social media many times, and I'm going to say it right now, I believe that ETH next year is going to way overperform Bitcoin. You know, if you look at that ratio right now, the ratio where this is, let's say, roughly 3,000 and Bitcoin is roughly 8,500. So what is that, like it's like 28 right now is the ratio. I think the ratio is going to go to 15. And that is ETH way performing the Bitcoin market, because ETH is essentially fantastic at supporting and building on it for especially the rails for cross-border money transfers. Bitcoin doesn't have that at all. I mean, Bitcoin is a much slower when it comes to something like that. And all that Bitcoin has is, in my opinion, is speculation right now. So I think Ethereum is going to do much better next year, even though right now they both look equally as bad. Downward turn right over there in momentum continues to point to the downside. Potential bottom going to form right in there at some point in the next month. Here you could see Ethereum is only pointing to a couple of weeks away before that bottom is set in. It's gotten pretty close to that number. And it could be where it only tests this level at 27. It could be also where it comes down to the bottom of that support area on the weekly. That's way down at 2,100. But I would love to see that happen, because I can't wait to buy Ethereum, especially in a pair trade versus Bitcoin. So that, in my opinion, would give me a great opportunity. Right now, both of them looking quite negative. Let's take a look as we look at the silver market. And I see also we have a question for gold. So I'll start in gold/GC. And let's open up the weekly chart right over there. You can see in here the cyclicality. Let me just bring it to these cycles that you see right over there. There is silver. Silver has been out of phase with the gold market. Now you can see there's more of a convergence going on as they both made their lows together right over there. So you could see how the slim ribbon, how the reversal scout in here just flattened out during this corrective period right there. It created this range. Interestingly, this looks like the range that we're seeing right now in the stock market. And once, resolved into this upside move in the gold market and broke out above that level, you see what we had. There was that message right there. Cycle peak resistance, breakout positive. It finished the minor cycle right here and then exploded to the upside. This cycle right over here, this corrective process, only flattened out the reversal scout and it turned up again. So what do we have here when we look at this? We have this rising phase right now about 7 weeks old. That's not very old. And you can see in here, there's a corrective period, due out somewhere out into March. I think that's going to coincide with a decline in the stock market, where all the risk assets get sold out over there, and that might take you out into March or April. And when I do my big picture analysis and all of that's going to be done in the next 2 weeks in each of these individual markets, then you'll be able to see how I see the alignments with the corrective period in the stock market. So this, by the way, all of these videos for the monthly analysis, big picture for projections into 2026 will be living in our investor hub, which we're going to announce to you later on in the show. So momentum turned up here. This looks absolutely solid. Here's your projections right here. 40, let's just say 4,500, 4,490. Right over here is about 4,700. That could easily happen, either of those prices, as we get into extending out these rising phases on the weekly chart. So remember, momentum turned up right over there, as you can see. Look at this daily cycle right over here. So what happens when the momentum is very strong, which we had the weekly cycle bottom right here and right around here. When that happens and the momentum is strong, it doesn't let the daily chart correct. This is called swamping. Why is it swamping? Well, it's swamped by the energy on the longer term as that's going up. There's your weekly and here is your daily. Now, why is the weekly doing this? It's because of the monthly. And that's why it's so important to bring the monthly work that we're bringing to you for our Investor Hub beginning just this week. If you look here, this is where these look like it's going to correct to. I could just project right in here and say, well, it's going to break that upward trend at some point. It's going to come down to some support level right in here. And this is where it makes that next significant up move right there once that bottom is in place, and you get to see that move up there, which could potentially take you up to 4,700. So I'm projecting out the shape of this, the swamping in here, the solid slim ribbon PO. Look at this signal, buy it. Look at this signal, buy it. I mean, just phenomenal in there how good that was. Look at the negative signals here, which said the rally's not going to continue. Whack, it moves down. So slim ribbon PO level 4 indicator is fantastic. You can see in here the option bias indicator telling you keep your positions on the long side. It did go neutral for some brief days in there, but then as the correction ended, it turned back to the positive side. Gold market looking solid to me. And like it might have a pullback into early part of next year, early January, as I'm illustrating here, but then probably moving sharply to the upside again. Here's your silver market. Now, silver took the lead, and here's where that low is in October, where gold and silver bottomed together. You can see that the gold market was a little bit later, supposedly, but it didn't matter because it was well within the bottoming timing, and it made its low right over here. Look at the reversal scalp. During this correction, it wasn't even able to tick down. During this minor correction, it wasn't even able to tick down. This gives you some very significant, powerful, bullish warnings when you see that. Powerfully moving to the upside right over here. It got past every one of the projections that we had in there. The next one right up over here is 7160. 7170, something like that. Based on the strength that we see right over here, I mean, who says it won't make it there? I mean, that's only, what is that? That's $4 and something away. It could be in the next week or less. So this looking absolutely powerful. Those of you that followed me know that I have been buying physical gold and silver for a couple of years. And it's so funny because I'm a typical trader. I bought a lot of it. Have a lot of it stored away. And when I see this going on, it seems like I don't have enough of it. So that's what we all go through as traders. So, but I have a lot of physical silver. And of course, I love seeing this, and any dips of significance, I'll probably be accumulating more. I have no urge to sell any of it right now. And that's because of, well, government policies that just absolutely have no indication at all that they're going to be creating less money to support their insane spending. So that's my one political statement for the day. Of course, I'm not picking on any one party. They're all culpable. This is amazing. Look at this very strong swamp cycle that we had in here as it just danced up the slim ribbon and gave you this tiny little pullback in here. For psychoanalysts that, are looking at corrective periods in here, when you see the positive momentum, you just don't short it. You just wait for a buying opportunity. And my buying opportunity was down here at around 58 something, and it never came. It never got that low. So this was an easy one for me to miss as far as no buying opportunity there. It's continuing to go up. Here's that 72-ish area of the weekly fib extension, 71 and a fraction. And that's where it looks like it's going as it continues to make new highs right over there. So the silver market, super, super strong. If I blow up the 2-hour chart just for the fun of it right here, I don't have any cycle analysis on there. But I mean, I can show you these 2-hour indicators right over here. And you can see that, I have the reversal scout on here. It had a little correction. Now it's starting to turn up again right there on the 2-hour chart. And you can see these 2-hour signals here on the Slim Ribbon PO right there as it remained bullish through here, turned neutral through a correction, and now is turning green again. On the bottom here is the market condition indicator, MCI. I built this multiple time frame indicator many years ago to put here on Thinkorswim because I wanted to be able to have an indication of multiple time frame conditions. Now, our market condition monitor application essentially does the same thing. It brings in the multiple time frame indicators. And you can see in here, this has been solidly positive up here. It only goes from 100 to minus 100. This is not an overbought condition. This is a market condition. And it has told you about the solid uptrend that's been going on now. And now that has not changed. So that's the market condition indicator. It's just a great indicator. Silver gold, just absolutely solidly positive when we look at that. Somebody wants me to look at the US as a JPY US dollar, JPY/US dollar. That would be the other way, sorry. There we go. So this one here looks to me as the dollar has been somewhat strong, and we've been looking at potential upside. It's especially been because the yen has been so weak against the dollar, and you can see in here the nice cyclicality that's in there. Each of these vertical timelines show you where these cycles actually bottom. Remember, cycles don't bottom exactly on time. This is just money flow rhythms that we see in there, and sometimes it's shorter, sometimes it's longer. So that's why we put these ranges of time in here, and this needed to be updated, where the next corrective period probably is somewhere in that time period. Right now, this is still pointing to the upside. There is resistance right up over here and right up over here. So Japan is in a lot of trouble. Simply because their inflation is going up, interest rates are going up. They're at the highest interest rates we've seen in a couple of decades. And that should be actually attracting money into the yen. It's not. It's not because of their economic troubles. And so the yen continues to move sharply to the downside. I'll just show you the /J6 right over here on the weekly chart. That's /6J, right? There we go. And you can see in here, this points to a decline in the yen all the way out here into February. So this is the inverse to the US dollar JPY. So that says a rally in the US dollar JPY is likely to come into the February timeframe. Let's go back there. And you see here, this points up to late January. This is February right there and right over here. So that's why these are pointing up to this length of time. And then after JPY makes its low in February, these will then likely turn down. So Japanese yen, very, very weak. That is giving support to the dollar in here. Now, here's a real problem when you look at this and you look at the conditions relative between the yen and the dollar. We could have a serious carry trade unraveling, the inverse carry trade, because people have borrowed at zero for so long, and when they borrow at zero and in the yen, and all of a sudden interest rates go up to 1% on the near ends or 2% on the 10 years, then the people that are essentially short yen in the carry trade have to buy yen, sell dollar denominated to unravel, dollar denominated assets, the speculative assets, stocks, Bitcoin. That's why you could at some point really see some hard selling in US assets if this continues. If this gets to that 159 or 162 area, they are going to be scrambling to cover their yen shorts and to then be selling US assets. So this is something to be very important about when you look at that. Let's see, only thing I did not cover in here is natural gas / NG. So we had this big upward spike in here based on European demand for natural gas and based on what was very cold weather predicted. But then it got slammed and came back into this area. Now I have this listed as support buy zones right over here. Thing is that there's probably 4 to 8 weeks of time in here for a correction on the weekly chart. So I'm not really excited about being a buyer in here for any rally that can sustain itself. When I look at the daily charts right over here, this kind of looks to me like it actually is going to continue down into that time frame right over there. And then when I look at these other cycles, this has a February trough. This has a February trough right over there. So it says to me rallies in here are likely to fail. And here's that February trough right over here on the weekly chart. So you can see how those work together as I use the multiple time frames. Momentum in here has turned negative. The option bias indicator is now negative. And right over here, you can see on the bottom that the market condition indicator is about to cross below the -25, which is a negative signal right there. So right now, into February, natural gas looks negative to me. I'm going to answer a quick question that I see there from DJV, who asks me, why don't you use the reversal scout on the 2 hour, but Matt does? Can you elaborate on your reason for that preference? I actually do use it. It depends on what chart you're looking at. I just illustrated some 2 hours with the reversal scout on it. Also, I think the reversal scout is really good when you use it on really any time frame. It really gives you great information regarding the momentum in the market. We have 4 really good analysts here. We all use our indicators in slightly different ways. So Matt, who is the boss of the day trading, he really does an amazing job on our day trader service. Really heavily uses the reversal scout. Good for him because it really is still a good indicator. Most of my focus is really on the daily and weekly and into the monthly. So I just don't go to the 2 hour that often. So if it seems like I don't use it, I don't think that's correct. I do use it, but I just don't use it as much because I don't go to the 2 hour charts quite as often. All right, so I think I went longer than I expected to in here. I'm going to turn this over to the team. I see there's requests for Apple, for Newmont, and we have some other requests that Katie has from other members. So I'm going to turn this over to the team. You can take it.
All right, great. Thank you, Slim. Appreciate it. Let me go ahead and share the screen. I'll do one of these and hand this off to you, Katie. The one I had was NEM. So NEM here on the intermediate term is really so strong. Formed its low right on time. Nice move down. Already moved back to highs and is very early in this move. So likely headed much higher. We have a zone up here. As you can see, we're looking for a move into that zone. This is still very early. If this tries to move down, we look for it to turn right back to the upside. This is so strong. And you have to keep in mind where this has come from, right? This has been working its way sideways for years, right? Miners are going so much higher in time. This is so bullish. Okay, if we hop over to the short term, you can see it just moved sideways and is already trying to move its way back to the upside. Everything here is very strong, even on the short term in NEM, and that's our look there. And I'm going to go ahead and hand this off to you, Katie.
RB, do you want to do Apple?
Oh, Apple. I didn't see that. Sure. I didn't see Apple. Okay. Let me pull up Apple. Thank you for that.
Sure.
On the short term in Apple, I'm sorry, on the weekly in Apple, it had to move up and is not moved back to those old highs. So holding in, but not holding in all that well. Short term, you can see we have now moved back to this old low. So what are we looking at here? Are we looking at a little high that is forming in Apple? Certainly possible, right? Certainly something to keep uh, in here, because if we see a little move back up, a failure somewhere around here, right, and it starts to curl its way back down and loses that low, that would be a high that has now formed on AAPL. Okay, gonna go ahead and hand this off to you, Katie.
Okay, let me share my screen. First one that we're going to look at is Freeport. Let me know when you can see that.
Not yet. Yep, good to go.
Okay, great, thanks. All right, so Freeport McMoran, we just had an intermediate low form just several weeks ago here, looks like about 4 weeks. And these cycle brackets, a very busy chart. This black cycle bracket is Freeport. This blue one is COPX, which is copper miners, and the red one is copper futures. So you can see going back how all of those interplay with each other. So right now we are testing this prior cycle peak right here at about 49.15-ish, and gotten slightly above that. Early in the rising phase, the next levels up would be this prior cycle peak over here at 52.61, and then this peak right here at 55.24. We don't expect a trough to form in FCX until the summer of 2026. So this is very bullish. We are looking at higher prices in this one. On the short term, you can see that we are about mid-cycle. This one is the copper miners again, and this is the dominant FCX daily cycle, 40 bars. We have a timing window coming up in the middle to late January. So if we get pullbacks in here, you can see on the slim ribbon PO that Slim was talking about earlier, this hasn't even been able to get underneath the 25. So very strong, and we would be buyers on any pullbacks in here. Costco. All right, Costco is inside the weekly cycle timing window, and we are expecting a trough to form shortly and then for a move back up. This is the resistance zone here because we have a negatively configured cycle. So that means that this cycle is ending lower than where it began. So the resistance zone right now, the bottom of it is at about 930. The top of it is at about 980. So we would expect to be able to get up into that zone once this trough has formed. Now, when will it form? Let's look over at the daily chart. And we have a timing window coming up between 12/23 and the beginning of the year. So you can see that we are just kind of hovering right here, moving sideways in this area. The next level down here is the 100% extension at 836.29. Maybe we can get down there, or maybe we just retest this low right here, found some support at about 844. So that's kind of the range. We are expecting this trough to form it before the end of the year, and that would give us our synced intermediate and short-term lows. Now, just for context, let's also look quickly over at the monthly chart. And you can see that we are expecting this monthly trough to form at the same time. So we expect Costco to be able to do much better out in the beginning of the year. The next one that I had was a request that came on Discord, SMH, the monthly and the weekly. All right, so this is the semiconductor ETF. Here are the holdings as of the end of October. We are testing this 100% extension level. We have nice, strong momentum early in the rising phase of this cycle. It's a 32-month cycle. And so we are projecting up to the 127.2% extension currently. If we experience a shift in momentum in here, then we might move this more sideways to lower, depending on how that shapes up. But for now, with the strong momentum and just riding this up, we would expect 424-ish and possibly higher. Over on the weekly chart, you can see that we are getting a little bit of waffling in this reversal scout, some sideways consolidation. So we would expect that to possibly continue. We have a timing window here between February 9th and March 20th. So assuming that this holds up, then I would see this as a buying opportunity as long as we don't get too deep of a retracement. IGV was also requested. So this is a tech software sector ETF, and you can see the holdings here. Right now, we're early in the rising phase on this monthly cycle, which is 33 months in length. Projecting to the 78.6% extension currently. Now look at this reversal scout. It is beginning to flatten out, but we do not have a break of any significant support levels yet. This is a very long cycle, goes out to the beginning of 2028. So I would expect that we would maybe get some consolidation in here, and then perhaps later in the cycle, make an attempt for this level up towards 127, possibly even higher. We'll have to wait and see. Over on the weekly chart, you can see here was our weekly cycle trough that formed, moving up. We still haven't got our reversal scout to turn up yet, although if this continues sideways to higher, then we'll get a reversal scout that turns green, and we would expect to be able to take out at least retest this prior cycle peak and possibly take it out. This cycle goes out to July of 2026. And the last one we're going to look at here is IYT. That is the transports, and this is the monthly cycle here. You can see that we've tested this prior cycle peak, bounced off of this 100% extension level. We still have positive momentum. Would expect to try this area again, possibly higher. We do have a monthly cycle timing window that begins in July and runs through the end of 2026. So at some point in here, we would expect this to curl down a bit, but for now it's very strong. Could see something like a higher move here and then a relatively shallow retracement. Over on the weekly chart, let's go and see if there are any warning signs there. Nope, still looking good. Here is that weekly cycle trough. You can see this sideways move just consolidating through here, a move up and a slight retracement this week. Would expect higher prices in here as well. And those are the charts that I'm looking at today.
All right, great job, everybody. That's going to wrap up our Q&A section for the week. Remember that those of you that are interested in participating, you could become a level 1 to 4 member, and then you'll get sent a link, and you'll be able to join us in the room here and then ask your questions. So if we missed anybody's questions, we did run out of time here. So of course, anybody who's a level 2 or higher member can get our analysis in our charts hubs that you'll be able to catch up if you missed anything, because we update those all of the time. So thanks for those of you that did participate. All right, I'm going to turn this over to Matt. He's going to bring you a review of our services, specifically holiday specials. Give the gift of askSlim. Really our most successful promotion that we ever do. People love this because, well, Matt will show you why. And our amazing day trader service. Matt, it's you.
All right. Thanks, Slim. Great work, team. Just share my screen. We'll get started here. Okay. So for those of you that are not familiar with askSlim, we are a technical analysis firm. We provide technical analysis services, trade planning, education, and trade planning tools. We do offer membership services. So as Slim mentioned, we have some holiday specials that are going on. First, I'm going to step through what our memberships are just at a high level. So we have what we call 4 core memberships. We start at level 1, we move all the way to level 4. And these memberships are for various trading styles. Those range from anyone who's a short-term swing trader to an active investor. And as Slim mentioned, we'll talk about our new investor hub here in a second, where you have a focus on long-term analysis. And then we also include a separate standalone day trader service. So the day trader service is extremely comprehensive. It's designed for supporting intraday swing traders, those of you looking for price moves that can last just for a few minutes or even several hours, because we use multiple time frames in using multiple studies for the intraday focus. So the holiday specials that we have, they are on levels 2 through 4 and our day trader. So I'm going to jump over to that separate page that we have, the information page here. So if you have an interest in joining askSlim, this is probably the best time of the year to do it, because as Slim mentioned, not only are you getting a discount, but we're giving a gift back to you. And so what I mean by that is that you have over 35% off on level 2, 3, or 4. So that would be a savings on a 3-month special. And then in addition to that, there are Amazon e-gift cards that we give back to you when you make this purchase. So those of you that purchase this for a friend, family member, or if you're looking to upgrade, then you qualify for this opportunity. So level 2, you'll receive a $20 Amazon e-gift card. Level 3, you'll receive a $50 Amazon e-gift card. And then at level 4, you'd receive a $100 Amazon gift card. So again, these are incredible specials. They only happen once a year, where we have a discount plus a give back to those that make the purchase. And then we've added in as a bonus the day trader service. Again, this is a standalone service. If you buy 2 months of the day trader service, you're going to get a month free. So it comes out to $89.90. It's an incredible deal. There's so much that you're going to learn, which is incredibly important if you're a day trader, or if you're wanting to learn how to become a day trader and what it really takes. As I mentioned, it is very comprehensive. And I have done a webinar recently, so where you can find that, we actually put this right on our memberships pages. So if you are in the memberships area and you scroll down on day trader, it says click here to watch the walkthrough webinar. It runs about an hour and a half. There are chapters that I put in here where you can go through and pick sections out, or you can put it at double speed and get through areas that you want to hear about, and then you could slow it down when you get into areas that you want to specifically focus on. But with the day trader service, I'm just going to give you a very, very high level review right now. There are 4 main areas to it. There's an impulse monitor, and this does not require a separate software at all. So this comes with your membership, and essentially Slim, he created a proprietary set of indicators for the intraday. And what they're doing are looking for the conditions that are likely to unfold into a larger impulse. So this isn't for necessarily, this isn't a buy-sell signal, say, for a scalper. This is for someone who's looking for more of a swing. Let's say 10 minutes to even upwards up to a couple hours, when you want to know that the larger swings are either in development or already underway. It really can work, though, for a scalper if you have a big move that's underway. Watch for those pullbacks in the stronger directional condition, and that sets up typically where you have another leg higher or lower if you have a dominant condition already in place. Plus, we have a little turbo indicator, which just says that in that moment, there's some extra oomph that's happening in that particular symbol. What's cool is that you can jump to, and we focused on like the top 20 most liquid symbols here. So you can click on the impulse condition, and then you can sort based on which ones are in a positive impulse condition or negative. And so you can very quickly see what's happening, relatively speaking, as well in terms of strength and weakness. And then obviously you jump to your charts and go through your process. But this is an example of what we do really, really well here, and what we focus on with askSlim is that we take our knowledge and we filter through our methodology edges for you, right? Because we want to try to find an edge. How do we gather an edge? And one of the most important things that you need to do is define that directional bias at any single time frame. And what we do here is we bring multiple time frames to make that happen for a specific trading style. And particularly here, it is for a day trader, especially if you're an intraday swing trader. So that's the impulse monitor. Again, I'll try to be as fast as possible. Then we have a market replay system. So the replay system allows you as a day trader, if you are new, to get a feel for how the market moves. You'll see it pop up here in a second. It's just loading all the charts. What it does is it functions as a replay system, and you can really get a sense of your style. You can get a look at every 5 minutes the price action. This is today, so you can see each 5 minutes there's a screenshot, and this is we have two different live cockpits. So we call them the cockpit because these are setups that we've created for day traders. We have a cockpit 1, which is the cash indexes and the ETFs, and then we have the futures cockpit, and this is cockpit number 1. And you can see the impulse monitor here on the left. Then we have an 8-minute chart set up here in the middle, and then we have our 15 minutes. So this is like our multiple time frames. And then we have very clear indications of the dominant directional bias. So there's a label up here that changes in real time, as well as the impulse monitor, telling you that the larger directional component for the intraday, what is it likely in right now? And so it's extremely helpful. You can see here, if I just fast forward a little bit, obviously there's a strong open. And what helps you to do, let's just focus on the Russell for the minute here, right? So we opened up strong in all 3 indexes. The Russell starts to pull back, but you can see the impulse condition positive. You can see the labeling still positive, and then we start to get a breakout. So that's what I was talking about before, where even if you are a scalper or a swing trader, you want to know that dominant conditions because you're likely to have a continuation in that same direction. I'm not going to go any further on this. I've done an extremely deep dive. I've done several of them. If you go to the website, you can watch the replay of the walkthrough for free and get a lot of tips in there. I'll be doing another walkthrough next week, not just on the day trader, but all of the memberships that we have as part of the holiday special. So I'll be walking through level 2, 3, 4, giving you insights into the educational opportunities, the trade planning opportunities, and the tools that come with these memberships. And we'll also do another quick review of the day trader as well. All right. So again, you can find all of these specials right on the website, and these will be available for another couple of weeks, and then they'll be gone in terms of the significance of the discounts and the give backs and so on. Anything else we wanted to cover, Slim, or is that?
Yeah, one thing that I wanted to say that I think is really important, and that is that, I've been a day trader essentially for over 50 years. And I started on the CBOE in 1974. I was a market maker, so I'm a day trader. We just buy and sell. And, as the markets changed and my style had to change along with it, which happened multiple times, then, there were different ways that we had to figure out to find our edge as we traded in the markets. Now, it is so unbelievably important to be able to identify the market conditions because momentum is king in all different time frames. And I got to tell you that based on everything that I look at in the markets, and I look at a lot of services out there because I want us to remain competitive, I think that our day trader service is as good as it gets. I mean, it's just I'm so taken by how well you can understand the market conditions in multiple time frames and adapt your own style. If you're a scalper, I mean, using the shortest end of this, along with the information that gives you a sense for direction for momentum, it's going to really help you catch those big swings and importantly, stay out of being on the wrong side of those.
Yeah, Slim, you can see those arrows right here. This was when I was doing that webinar actually live.
I took it over from you. You're not
did you?
live
Okay.
anymore.
Okay.
So, you want to take it back and show me?
Yeah, sure.
Okay.
Really quick. Oh, actually, I think I'm still up. So if they click on the tab with my name on it, you'll see the other screen. But you can see here how we had the dominant directional bias, that we color the candles. Obviously, when you have bullish condition, it is a lighter green or darker green. And then when there are momentum continuation or important bias flips, you'll see the arrows start to appear, letting you know those aren't necessarily buy signals, but they're letting you know that momentum is aligning again and again. And, typically you don't want to go against when momentum is in alignment, or if there is an alignment and then it gives way and flips back, that tells you there could be an important peak or trough that formed. So a ton of good information. Then we have a Tradar Radar that's a price wave indicator, and you can see how that wave develops as you make a low, the consolidation, and then the corrective phase, and then all of a sudden you'll start to see the wave start to develop again, and that really helps to give you a feel of the ebb and flow of the price action as well.
Yeah, so look at that 3 minute where it turned over right there and started to give you the change of information. You see the yellow, the Trader Radar turned yellow. If you were in that long side trade, well, you're done with it then.
Yeah, you can see it go from green to gray. And so when you go from green to gray, that's a consolidation. That's your first warning. Then the Tradar Radar fires the warning sign. The SMI rolls over, and you can see the labeling very clearly when you have these turns occurring.
Right. So trade over, you're waiting. If you're, because if you go to the short side there, you're fighting the 8 minute, you're fighting the 15. So you're really maybe looking for the next long side trade when that stops moving down. Sure. That could be your long side setup. I'm telling you, this is really one of the best I have ever seen. We've taken a long time on this, but I'm just so excited about it.
Yeah, we launched it in late November of 2023, and there's been several upgrades since. So for this special of $89, $90 or $89, $90, you really can't beat it in terms of what you're going to learn.
That's for 2 months, and you get a free month.
That's right.
So that's great. All right, sorry, I was just bubbling over on that one. So
no problem.
I'm really excited about it. So all right, so we're going to move on here.
Yes.
All right, stock market analysis and projections. Some important information, of course, for you to look at in here. This simply tells you about our approach to the market and the importance of you taking ownership of your own trades. If you look at the information we provide, or if anybody provides to you. So take a moment and do watch this slide. This is the introduction to the askSlim Investor Hub. This is something that I think is really important to our business. And what we cover now is long-term analysis and projections. That's monthly charts, and we have videos and trade ideas and more. In indexes, stocks, stock sector, ETFs. And this is available to our level 2, 3, and 4 members. If you have any questions about this, if you're watching this on our website, then you can write to Katie at askSlim.com. Katie is the lead on this project. She does a fantastic job, as you will see, if you are a level 2, 3, or 4 member, and you can access this information. And she's really well attuned to putting together the multiple timeframes. In this case, often we look at the monthly and also the weekly. So she's the lead. I'm essentially a contributor to this also, but she's the one that really is in charge of the monthly charts. And I'll be putting videos, especially mid-year, year-end type videos in here regarding the bigger picture. And Katie will, on a regular basis, be putting in the updates and the videos that you see in this section, the askSlim Investor Hub. Why did we do this? Well, when we put up longer term videos, especially in social media, they get massive views. I mean, there is a huge interest in the longer term picture on these things that we cover, and we're going to cover really the meat of the markets in this section. And so based on demand, based on the huge sector of investors or position traders that are interested in this type of analysis, we decided to bring it on. Katie, I'm going to bring you in on this discussion because, first of all, Katie has just a great introduction to how to use this section. If you go on there, there's a video that she did, and you'll be able to see that. And Katie, just talk about, what's important to you in your approach as you then bring this great analysis to the investor or position trader.
Sure. Well, first of all, I would like to talk about it in terms of your time frame for investing. So we have long-term holders, and for them, the monthly charts are going to be key because you want to find the right time for buying, perhaps, like I showed, for example, with the Costco chart just a few minutes ago. Those are those ones that are inside of a monthly timing window. Those are going to be on our radar for a longer term buying. And also, if you are, let's say, a swing trader, you might be in the process of buying something based on analysis from the weekly chart, but it's good to just take a quick peek over at the monthly chart to find out where we are in the cycle, for example, and also what the momentum situation is there, because those longer term charts are going to be dominant. So you don't want to be perhaps buying something that is in a negative momentum situation and coming into a period of risk over on the monthly chart, because you might not have your expectation met as far as what you're trying to get out of the trade.
Yeah, that's great. So, for me, because I'm always looking at my focus being really a swing trader focus at the daily and the weekly charts. And I often, point to the fact that the weekly chart momentum is what's driving the daily chart movement. Now if we step this out to an investor perspective, it's really about the monthly chart formations and the monthly chart momentum then affecting the weekly chart. So it's important to be able to step out to those multiple time frames to really get a good picture about the market condition and direction for each of these symbols that we look at. And I think that you will discover for investors as you look at the charts that we put up that there will be times when it looks like a market is pulling back and the maybe a bounce is due when we look at the weekly chart for a swing trader, but the monthly chart is so negative that it's giving us a warning that if you're an investor, this is not something you want to go in. You want to really go into where everything is aligned for the bigger moves. It will identify also short side trades. Anything more to add on that, Katie?
No, as a matter of fact, for those who have taken the psychoanalysis workshop, the video that I just did for the addendum to that talks about the exact situation that you just described. The example that I used in that video was Home Depot. We are expecting an intermediate bounce, but the monthly chart shows that this would not be the time to get into that if you're a long-term holder.
That really speaks well to the importance of the new askSlim Investor Hub. That's our introduction to it. Again, watch the video that Katie did that's on the site there on the Investor Hub page, and she really walks you through everything on how to use it. That is the Investor Hub. All right, let's get into the stock market analysis. The stock market this week, well, mixed to lower, we'll call it. Investors mostly focused on corporate news. AI stocks, they waffled around and the news was really mixed in there. NVIDIA, well, they were given the okay to sell those H200 chips to China, those GPUs, which they were originally blocked on doing, and China said, forget about it. They don't even want them. They want their own companies to develop their own chips. So you can see that there are headwinds now, at least when it comes to China for NVIDIA. And the chart, of course, is reflecting some pretty toppy action in there. Oracle, which did absolutely fantastic on the upside based on its earnings report, well, they lost their financing for their data center. Maybe that's temporary. Maybe they'll get it somewhere else. But Blue Owl walked away on that Oracle huge deal for like $10 billion of financing because they're worried about the debt load. Oracle has like $140 billion of debt on their books. And they have to, at some point, start to worry about how these companies are going to pay this stuff back because monetization for a lot of these companies is going to be a challenge. Micron soared on great earnings. Now, I have been a Micron trader since this stock was a baby. And I have watched periods where there have been great demand and shortages for their memory chips, and also periods where they got completely commoditized by other companies that, brought them out, and the prices just absolutely collapsed. So I've seen both sides of it. Right now, this is a really good side of it. And the Micron chart actually looks to me like there's more coming on the upside. So I'm actually, as a trader, I want to buy a dip in there. The stock actually, relative to the rest of the sector, looks cheap to me, based on the earnings and earnings projections. Broadcom got hammered, and that was despite huge earnings. And that's what happens when these investors get way out over their skis on what they are anticipating as far as the stocks and the value that they got up to. Let's talk about Tesla for a second, because again, this was a week of investor focus on corporations. They got made to an all-time high, and this is not because they're selling EVs. It's surging on the prospects of robo-taxi, which we know Waymo has been doing very well, and they got some catch up to do there, and robotics. So people are buying Tesla based on the future. They're not buying it based on EVs because there's really an EV debacle out there. And when these government incentives ended and people stopped buying them, then you really got a good sense that it was really about us paying money to Tesla and other EV companies, so that people would be incentivized to buy those cars. Ford is exiting their big effort in EVs, as they've ended their F-150 electronic. It's an EF-150, and they're going to go to hybrids. So they're leaving it and writing off like almost $20 billion. So there's massive EV losses out there. Tesla is not going up because they're selling electronic vehicles. It has nothing to do with it. And the new highs could bring more new highs. Nike was crushed on weak China sales, and they were hurt by additionally by tariffs, as they talk about, and the stock is really crushed, having a very, very bad day today, and that's why the Dow is a little bit underperforming the market today. CPI this week came out at 2.7%. I think it's bull crap. That's year over year versus the 3.1% expected. So don't believe the data as far as I'm concerned. There were huge reporting gaps in the data because of the government being closed down for 40 something days. So we'll probably get some idea of the real numbers. But certainly the Trump administration is celebrating the fact that they now have inflation controlled when they have almost $2 trillion in debt that they're putting on this year. So I would be skeptical about this numbers. And for the week, the index is narrowly mixed on this jump that we're seeing here on Friday. The NASDAQ, S&P 500, not far off of unchanged either way. The Russell down about 0.75%, and the Dow down about 1% here on the week. At noon here on Friday is when I did these updates. So that's what happened this week. Now let's talk about the stock market. We're going to look only at the S&P 500 and the VIX, multiple time frame analysis and projections. And if you want to see everything in the stock futures and other commodities, ETFs, indexes, everything that we do on that side of the market, well, you got to watch FutureSpeak. Arby's a master at it. Arby took this over from me a few years ago because I was the one that was always doing that. But here, I'll be 76 in 2 weeks. It's important for me to be rolling back a little bit from everything that I do. So Arby has taken that over some years ago and does just a fabulous job at it. You really want to understand these commodities, these indexes, and our style of analysis. That's what you want to watch, level 2, 3, and 4. And I will also bring you our market condition monitor in just a few minutes. So let's take a look at our stocks right now. So we're going to switch over to the stock market, and we're going to put up SPX. So I have these charts a little differently than normal because you see there's not a lot of cycle lines all over the charts. I just want to do it this way today because There's number one, a lot of people that are not real familiar with cycle analysis, and I'll kind of bring that into the picture right now. And also that you get a pretty clear picture without all my lines on there about the momentum conditions that are in the market and the importance of our momentum indicators. On the bottom here, you could see our cycle brackets, which I did include in here because that's important to this discussion. So here on the left, you can see that I have the reversal scout. I had the 34-week moving average, but I took that out of there. And then over here, you can see we have the, what do we have here? Reversal scout, the slim ribbon PO right over here, and the option bias indicator on the bottom. And here on the 2-hour chart down over here, you can see we have our market condition monitor. So I have the 2-hour chart also visible in here. Now we'll take a look at that. So what I want to show you specifically, if I talk about the cycle analysis, is that part of understanding cycle analysis is understanding the energetic movement, essentially flow of money. You can see in here where there were 3 cycles that were troughing together, how that is a phase where money would exit the market. That's essentially what happens in these periods right over here. Here you could see right over here where the same thing happened, where this dominant cycle. I have these labeled at 12, 24, 36 harmonics. It was 37, but I brought it down because it aligns pretty perfectly with the harmonic families that we have in here. And then you can see in here this period here where it was likely that there would be a corrective period. Now, this is favorable seasonality, of course, that we see right over there, and the market has not been able to tick down. And one very important point to make, and Arvi in his recent videos spoke to this also, important that comes the end of the year, there's a lot of things that happen that are strange in the market. There's reallocations by the fund managers, tax considerations, when the market has been up a long period of time, then usually what happens is that there's some selling of the stocks that have done really well against stocks that have done really poorly as the investors match up losses and profits. And it makes for some very strange action at the end of the year. So this is a good time to do the type of analysis I'm going to do right now. So let's just look right over here at this period on the weekly chart. You can see there, as I just take the same time frame right over here, that when we were in this corrective period on the weekly chart right over there, which took you down into April, our momentum indicator turned down right over here. And that warned us that this cycle was in its corrective phase. So what would happen during that corrective phase is that if there were shorter term cycles that appeared here on the daily chart, let me just move this over just a little bit, they would begin to take a formation that was negative. In other words, now I'm just consider this period right over here, and I'm just going to blow this up right over here for you to see that what happens is that when you have the cycle breaking this low and turning negative and coming down over here, that existed right over here in the weekly chart. When you got the next rising phase on the daily that you see right over here, it's very likely to fail and then give you another downside move right there, usually from the slim ribbon and some resistance area. So this period right over here that was negative was just absolutely perfect in our analysis. And it showed us that there was a negative period there and the market was likely to keep moving to the downside. Now, I actually thought that this cycle right over here could get a test of this low. It proved differently because when the momentum turned up over here, we saw that that wasn't likely going to happen. So now let's just look at this period right in here where the market had this rally off of this low. And let's analyze what happened in here. So here is where the slim ribbon, where the reversal scout turned positive, telling us that the market was now in the next rising phase. Here's the same time frame right over here. So now if I put in the cycle lines, you'll see that this upward momentum right over there was driving this. And you could see the slim ribbon gave great support right over there. So what happened? Here's your cycle right in here that you can see. And this is how the first one resolved. Actually drew that line incorrectly right here. That's how the first cycle resolved right in here. And then the next one was a little bit shorter that you could see right in here. So each of those driving up in a positive formation, higher highs, higher lows, because it's being pushed up by the weekly cycle. Here you can see the next one right here, and then the next one right over here. That's right here. And then the next one right here. And then what happened was right in here that this was the corrective cycle right there. So this cycle right there on the daily was actually weaker than the other ones because it was the corrective period right over here on the weekly. So we're getting this great information. And this is how we use this important information. Now, why did I take all this time explaining this to you? Because right now, what has happened is that this cycle corrected and likely made a bottom, and then likely is turning up right over here. What proves that to us right over here is that the formation in here will be positive. In other words, what happens is that the rally comes in here and then it corrects, but when it corrects into a support zone and then begins to move up again. The question is this the low, which would be a little bit early? It could happen on a holiday season where it makes that kind of a low, or it comes down one more time and gets into here. But let me just move this over a little bit and change the right settings so you can get a little better picture in here. And what we're looking at here is, there we go. If I just want to put in the support levels that were, because of where this rally came down to right over there, you could see that was exactly a 50% correction right there. Here's the 78, here's the 61.8 there. So if this wanted to, it could, pull back one more time to here, but this is awfully strong right there. That has me believing that, well, maybe that low is in place already. And then we're beginning to get a move to the upside right in here. And if that's the case, you can see, well, we're probably going to all-time highs right there. That would be in line with what I'm believing right over here. And now if I bring in my analysis on the weekly with all of the proper cycles that are in there, you can see in here as I blow this up that it really looks like there's that minor cycle that this is, going to break out of this range on the upside here. I would have to look at this as positive. And maybe that bottom on the daily cycle, let me just go here to the dailies and bring in that analysis. That low is either in place or it's going to get a little test in here. And you can see we have it labeled as a buy zone right there. Why is it a buy zone? Well, because everything is lining up. You could see on the bottom, the conditions in here, positive on the OBI, were neutral right in here because of these, this little correction going on, but this is likely to turn green pretty soon. And then what happens is that either we move up right like that, or we've already made the low right in here early because of the seasonality. And then it's already moving up, as you can see right in here. So everything I'm showing you is either bullish or turning bullish right there. And it's because the weekly has very likely turned up, momentum strong there, pushing up right in here. And that's how I come to this bullish conditions that we see right now in the stock market. So I kind of took you through all of the steps of what I normally do when I go through my analysis. The 2-hour chart is going to help us in this, and I'm just going to maximize this also right over there. And the cyclical patterns that we're looking at right in here, this is an example of that. This one is running a little short right now, where I would expect that it would continue to come down and test that level one more time. If it was not the holiday, I would be thinking that's happening. But we're already getting upturns right over here in the reversal scout. DJV, you asked me if I use the reversal scout on 2-hour, and yes, there's your answer right there, and that is helping. So that is, how I do this, break down the analysis in a way that I think is very important. Now, if I'm talking about the market moving to the upside, and when I do my big picture analysis, I'm going to show you that I think it's probably a rally into February or March. You can see in here what happened on the VIX cycle, and that's giving us an indication that it's already come down and tested this low right over here. Yes, there could be some declines and VIX could pop up, but this really points to late February right in here as the potential for the next stock market break. In other words, stock market does well into this period into February, and then we get the next upward turn in implies volatilities. And that's the period right out over here where you could begin to get some sizable declines in the stock market right there. So that's the weekly VIX. This is the daily VIX, and you can see it just is having a very hard time getting any traction right over here. It could get some upside right in there, but you know, if I look over here, that's February when that next cycle has its trough over there. So all of this is pointing to me that the stock market could have a good time of it starting either now or just in a few days and then move out into the early part of the year on the long side. Let's take a look here as we look at the market condition monitor. This is a level 3 and 4 indicator, the difference being level 4 gets the very intraday charts that are indicators that are right in there. When I said when I was building the market condition indicator, the MCI, was really building a indicator that embodies multiple time frames, so it gives a higher weight to the longer term because the longer term indicators have higher weight. So we had a question that I didn't answer on the regarding the Christmas rally or into next year, which sectors might perform well. It's pretty hard for me to tell you that right now, but I'm going to show you how you can figure it out. Look at the short-term readings in here. They're neutral. So like I said to you, either we made the low or we're going to come down and test those lows one time. I'm not really sure. And the market right now is neutral. When I look at the intermediate conditions right over here, you can see in here that the S&P 500 and the NASDAQ are in neutral conditions intermediate. The Dow is very bullish and the IWM is bullish. It is pretty likely that this positive period coming in the next couple of months is going to bring a continuation to the rotation. That means the Dow will overperform. That's the cyclicals that are in there. And the smaller caps, they probably overperform, while these AI stocks and tech stocks that got so incredibly highly valued probably lag in the market. So those of you that are interested, that you want to figure out how do you know when something is what's turning up first? Well, you could go into here and just do a search. I'm going to put it on short term right over here again. And let's say that I want to know the sectors and when they're turning positive. I'm going to go to XLF right over here. And you can see XLF is bullish. Of course, the banks have done very well. And I could ask it to notify me when it becomes very bullish so that I'd know when it then gets an improvement. And then if you download our application, our notification application, it'll send you a notification there. Let's say XLE, which has been very weak, and you can see it's bearish. Let's say I want to know when it becomes neutral. So you get the little bell right there, and it will then notify me when that goes to neutral. You can do this with all the sectors. XLK, you can see right now is neutral. XLI is neutral right now. And you can just go into all of these sectors and set it up so that it will notify you when those improvements come. And the first ones that come are the ones that are going to be reacting better when you do that. Let's take a look right now at the trade setup conditions. The ones that are very bullish right now on the short term, you can see right over here. This application just blows everything away. It's so good because you can see all of that information right there and set these alerts for yourself. The ones that are negative right now, you can see that right there. That are very bearish. So I kind of just scrolling through them there. You can do that. And of course, you can just look at the indexes if you want, which are right there by clicking on that. So when each of these changes, it goes into the change log right there. It's a fantastic application. You get a good picture right now that everything is right now on the neutral side when you look at the MCM, the market condition monitor. Remember, level 3, you can get the Christmas special, the holiday special, and get a $50 gift card back, and you'll be able to get the MCM level 4. If you do the same thing, you're going to get a $100 gift card back. So we're really making it easy for you to get these amazing applications. Talk about our specials. Matt showed you our day trader special. It's just $89.90 for 2 months, and then you're going to get a month free, which is just incredible. I have both cockpits here visible for you to see. There is nothing like this. When you really get tuned in to how to use this, you're going to have great market feel. If you're an intraday swing trader or a scalper, that's what this is built for. It's a non-recurring. So sign up for this, try it for 3 months for $89.90. If you hate it, well, go away. You're not going to use it. We won't charge you again. And you can just use our other stuff. But if in the case that you love this, well, you'll be able to, get another special Matt will offer for you. This is our specials for level 2, 3, and 4. Make sure you give this to somebody that you know loves trading or technical analysis, or give the gift to yourself. Great for first-time members, and use it to try a higher level if you want to upgrade, and we're going to give you back the gift cards. $20 gift card comes back to you with a 35% discount on level 2. A $50 gift card comes to you with a 35% discount on level 3. And a $100 gift card comes back to you with a 35% off of level 4. And all you have to do is go right over here to our holiday specials and click on there, and you'll get all the information that you need, and you can then sign up right over there. Everybody, we are done.
What a show.
Yeah.
Power packed, a lot of fun, great information. Great work, everybody.
Yeah. All right. Don't forget, go check out our new Investor Hub. Katie, great work on that.
Oh, thank you. And I want to wish everyone happy holidays.
Yes, and we'll see you in a couple of weeks. Happy holidays, happy new year to everybody. And Arby's waving.